Welcome everybody to today's Tuesday webinar. Today we're going to be talking about prepayment penalty strategies. My name is Carl Holman. I'm the communications manager here at A&D Mortgage and your weekly host. As usual, I'll roll through the etiquette and the ground rules first. We disable microphones and cameras so that we can keep our recording clean. We ask when you have questions to use the Q&A function within the Zoom functionality. You can also use the raise your hands. And then the only other thing I ask is if you can mute or turn off your cell phones. That way you have Mr. Majidian's full attention, and that way we can get through today's webinar quickly. All right, with that, I'm going to turn the microphone over to Mike Majidian. We're going to talk again, we're talking about prepayment penalties. So go ahead and take it away, Mike.
All right. Well, good day, everyone. If you're on the East Coast, West Coast, hope you have a wonderful day. Today, we're going to talk about a little bit about prepaid protection, I like to call it, or prepaid penalty known in the industry. But before that, let's talk about our company, A&D Mortgage. We're a family of the companies, and we're right now functioning the full service direct mortgage lender. We do all conventional government, non-QM, and we're based in Florida since 2005. We're rapidly growing. We are expanding. We're over 30 states, some more that I'm going to go through the map. The next one, then we talk about the areas where, let's see, we'll go to the next one. Can we go to the next slide? Okay, there you go. This is our map. This is where we offer full service. Where it's red, you need to be licensed, and on business purpose loans where you don't require, some if you do require license, some you don't. So pay attention to the stars. And then obviously the ones that are in gray, we're not in, but hopefully soon we will be present in states as well. Next slide, we talk about the one after.
Did you want to cover about Imperial Fund?
Okay, yeah, I'm sorry. Imperial Fund is another division of us that, we do a lot of bridge loans, a little bit more, credit challenge or quicker loans that we can do. We call them bridge, known as probably hard money, or also some commercial loans that we can do via Imperial funds. And we can go to the next slide, which is all right. What makes us different is revolves around the process and the technology. And obviously the hardworking people that are behind the scene in operation that are making this happen every day. So we take advantage of a lot of technology. We're expanding those. There's a lot of innovations taking place to make our originators have a much better experience. All right, let's talk about our next slide, which is prepayment penalty, or I like to call it prepayment protection. Just a brief idea. Prepayment is basically designed to protect us as a lender to be able to offer better rates and costs to the borrower. So the longer you commit to that, the longer you are with that protection, the better rate and the cost you will get. I get that question a lot. Are the prepayment penalties on owner occupied? No. We only offer prepayment protection on investment property. And there are some states that have limitations as far as the number of years, but we can go up to 5 in the states that are allowed. So again, this is for the protection, and for that protection, we offer you better rate and cost on that. So let's go to the next slide. That's another question we get a lot. Are we soft or hard on prepay? We're hard. Basically, if you sell or refinance, you're gonna get those penalties that are going to be coming with the term of your prepay protection penalty All right, so let's go to the next one. Well, what are the pros and cons? Well, basically, if you're going to keep your investment for a certain period of time, again, as I said, we have no prepay all the way to 5-year prepay, depending on your exit strategy. What is the borrower? What's the investor's exit strategy? If you're going to keep it for then 5 years, then definitely a 5-year prepay protection would be an ideal situation. If you're not, then that might not be. You may want to reduce it to a 2-year or a 3-year, whatever your exit strategy may be. If you're planning on making extra payment on top of the 20% that's allowed, then maybe prepay protection is not for you. But if you're keeping it for under 20%, so remember, every year you can contribute up to 20% to your principals to reduce your principal. And then I think the next slide, we can do some examples and I can show you how that works. See, if you have a loan amount, let's say of $500,000, and you go on, let's say 3-year, 5-year prepay protection. What you do is you want to get 80% of the remaining balance. In this case, 500, 80% would be 400,000. So what is the interest rate on 400,000? A 6 months interest of 400,000 at 6.5%. And that comes to be 13 grand. So that would be the payment. That would be the penalty, if you will. So imagine if you're 2 years in it and you already contributed, let's say 100,000, then you get 80% of the remaining of that. So just keep that in mind, that you can actually reduce your principal as well each year by 20%, and that will help your bottom line if you ever get penalized for paying it off early by selling or refinancing. All right, let's go to the next slide. All right, yeah, earlier I mentioned certain states have certain regulations, so you definitely want to make sure, state-specific programs, like for instance, Kansas, Michigan, Minnesota, those guys are not allowed to have any prepay, so we have to buy the prepay down to no prepay. Prepay are not allowed invested in, just remember, if you are in Illinois, New Jersey, so I don't want to go through all of that, but Virginia, for instance, anything less than 75,000 are not allowed. So, and so on, Pennsylvania, max prepay is 2 years for Missouri. Idaho, 3 years. And then we have DC and Maryland, all 3 years. All right, next slide. We go to this one. All right, so here I came up with, actually, this is a real scenario. Borrower purchased an investment property, single family in California, $850,000, and they're using a 24-month bank statement. So let me move this here. See it? All right. The exit strategy for this borrower was to sell the property after 2 years. So naturally what we do is we don't want to tie them up to a 5-year prepay. So we recommended a 2-year prepay only. And what it did was it helped the borrower to lower the cost and avoid any penalties. So if you look at to the right, no prepay would have been 8.49 with no cost, but 2-year prepay would have been 7.99 with 1/8 lender credit. So you see that there's a 0.5% better and also an 8 in rebate that they didn't get on a no prepay. So prepay can significantly help, again, if there is an exit strategy and if the borrower is going to follow those exit strategies. Otherwise, it will backfire. So next slide, we can go to. All right, this is another one. Refi cash out, Texas. We get a lot of that. Do we do cash out in Texas? Yes, we do. DSCR, 2-unit property, loan amount 430, LTV 720 FICO. Borrower has no intention of selling or refinancing in the future. So he owned it for a long time. and he wants to keep it. He's getting a great rate and he wants to have it. So instead of offering it 8.99 with no prepay, we recommended a 5-year prepay at 7.625, no cost. So you see the difference is huge. We're talking about 1.375, almost 1 3/8 better in rates. So definitely beneficial to the borrower to go with that option. Well, these are some of our competitors that we see, the competitor analysis that, if you see, some of them don't even offer 5-year or 4-year. I've seen as high as 3-year. And so these are the advantages. I don't want to go through all of this, but you can see that DSCR, prepaid terms, 63%, a bank statement, 21%, 27% on those areas. So we're getting a lot of requests on a 5-year, 4-year on DSCR. All right, we go to the next one. All right, I'm going to get back. All right, so we do offer prepay option for, just review that, investment properties only. So there are no prepays on owner occupied second home. It's not allowed. What we offer and a lot of other lenders don't is a 4-year or 5-year prepay, and that will significantly reduce your rate and cost. Obviously, no prepay is an option, and our penalties that we assess on those is 6 months of 80% of the remaining balance, which is very easy to calculate. We made it very simple. We don't have those step downs of 5-year to 4-year to 3-year and so on. So it's very simple calculation. Next.
Yeah, so I'll run through my slides before we do the questions, because I can do that fairly quickly. So before we get to the questions, I'll kind of quickly wrap up sort of the ways that we as a lender also engage with our broker partners. If you haven't noticed, we're on the cover of Scotsman's Guide. If you have those lying around your office or you subscribe to the digital edition, it should only be up for the remainder of the week. So if you go out to scotsmansguide.com, you can take a look at our cover, and there's a nice 2-page spread in there about us. A couple of technological tools that we offer to the brokers. We didn't get a chance to demonstrate it. I don't know if you still might want to during the question phase, Mike.
Sure.
The quick pricer, where you can run some of these prepayment penalty or protection scenarios, as Mike would call them. We also have an 80 appraisal center, which is where you can manage all the appraisals that you would want to order through our approved AMCs. We've got, I believe it's somewhere in the neighborhood of 24, so you can go crazy with all your appraisals that you would ever want, but manage it all in one central platform instead of having to go out to 20 different AMCs. And then 80 Studio is it's our all-in-one marketing platform. It's cloud-based or web-based. And it functions similar to Canva, so you can customize and go in there and put together flyers about all the different products. You can co-brand things, you can do social posts. So it's pretty robust with what's in there and what you're capable of doing. And then we also have our weekly webinar series that you're participating in now. We have 3 more lined up, and we're still finalizing the rest of July. But next week we'll talk about working with millennial home buyers, and then we'll have an open forum the week after with our broker support team. So if you guys are existing partners and you've got questions about automated decision maker, the quick pricer, any of our major tools, you can get online with us there and kind of run through some scenarios or problems you're having. If you're having problems. And the other is we'll be doing an 80 Studio walkthrough dedicated to how you use it, how you alter flyers, how you log in. So if you don't have credentials, you can go to our website. There's a button on the top for 80 Studio and request credentials and get set up before that if you're interested in that. We always get the question about whether these webinars recording, and yes, we are. So you'll get a recording of it either tomorrow delivered to your mailbox, or a link to them in your mailbox, or you can go to our website. It'll be posted on the Learning Center. The address is here, and the address is also in the same email that you'll get tomorrow. And when you log out, there's a quick 5-6 question survey that we ask people to take, just to let us know how we're doing, suggest any other potential topics, and tell us how you heard about us. And then finally, you can engage with us on social media. We've got platforms on Facebook, LinkedIn, YouTube, something called Telegram for people that aren't familiar with it. It's similar but more secure than WhatsApp. So it's a mix of a direct messenger and a news channel. So you'll be able to subscribe there and get all of our social media posts, access to pretty much everything on our website right there from your phone. And there's a couple of exchange groups that we're participants and moderators of, both on LinkedIn and Facebook, called Non-QM Exchange. So that's a good place to do some online networking and talk with other brokers out there and engage with us as well. And so with that, I will open the question and section open for everybody. So if you have questions, go ahead and start typing them into the Q&A, and we will start answering. And if we don't have questions, then we will convene early.
I guess prepaid protection is pretty self-explanatory, so maybe there are not a lot of questions on that.
Yeah, and we have enough participants. I'm going to unmute people. There's enough that we can do this. Nancy, I see you've got a question. I'm going to unmute you for a second. So if you want to go ahead and ask your question. You have to unmute yourself. Okay, she's not answering. Nancy, can you hear us? Because I've unmuted you, so you have to unmute yourself on your side, and then you can ask your question. All right, well, she figures that part out. We got a question. Somebody wants us to demonstrate the prepayment penalties over in Quick Pricer.
Okay.
Do you want to do it, or do you want me to?
Can I control that?
Yep. Just
Okay.
request control.
Oh, okay. Well, that's where I'm trying to figure out what that is, because I minimized it. Okay. Let's see. All right. I don't see my request button.
Okay. If not, you just want to run the scenario, I can.
Yeah.
Show it here.
Okay. So you're getting the scenario?
No, you just tell me what you want to run. There's no request for a specific scenario.
Sure. Okay. Well, let's just go with U.S. citizen, income type. Let's say DSCR. DSCR over 1. DSCR greater than 1.
There we go.
Okay, and then investment, and then we do a purchase.
Okay.
All right. So I just want everybody to notice when you put this parameters up here, DSCR over 1, and then you see these blue lines. What it's telling you is these are your limitations. So, but remember, since you picked Rhode Island, there are no prepays right here. So if you, let's for instance, change the state to, let's say, New York or other states. Okay, let me just briefly talk about this. All other state means if it's not on that list. So if we can show that list again. So if your scenario, if your scenario is not on this list, let's say it's just California or Texas, then it's not on this list. You keep it on all other states. All right. So then you see that you have a 5-year prepay on this scenario where the rate is 6.75. Keep in mind, you can change your LTV and go higher. And then you see that the rate changes. But, all right, let's see. Okay, right here. So let's say if you think that the exit strategy for the borrower is not 5 years, he wants to unload this after 2 years. So let's pick 2-year prepay. And you see right now, so your rate went up almost a half a point from 6.99 to 7.49. So the longer the prepay, the better rate's going to be, the better discount point's going to be. And obviously, you can always play with the discount point. You can increase the discount point and lower the rate. And pay very good attention to these other parameters on the quick pricer, property type. Make sure the mortgage history and the credit event, which means any bankruptcies, foreclosure, short sale, anything that happens in the past 24 months, you want to make sure. On a DSCR program, it must be 24 months or more. So you cannot. There's no option. Other ones. Now, if you would have changed that income type, let's say 2-year P&L, then there's a possibility you get an option for 12 months. So if somebody had a bankruptcy a year and a half ago, then there's a possibility. So if you clear the credit event, see, now you get 12 to 24 months, which is obviously the loan amount. Now you got a low amount because you are over 750. So that's the max you can do. So it's a great tool. I love Quick Pricer, and it makes his life. Somebody told me it's better than sliced bread. So it's, they love it. I mean, I get a lot of feedbacks that they just love working with it because it gives you all the limitations that you on any program.
Okay,
so yeah,
so we,
good demo.
Yeah, so we did have a couple questions now come in. Let me put this back in presentation mode over here.
Okay.
All right. So Nancy had a question about, is there an option to have a diminished prepayment penalty where the prepayment penalty reduces after each year the loan is held?
No, there's a flat interest on 80% of the remaining balance. So in order for you to do that, you can contribute 20% each year, lower your principal. There is no scaling down, from 5 year to 4 year into 3. So it's always going to be 6 months interest of the remaining balance. And a lot of people, they need to contribute. They can contribute 20%, up to 20%.
Okay. Great. All right, there we have another question. To pay off a loan that has a prepayment and calculate the penalty amount, it's the remaining loan amount times the interest rate divided by 2, which is the formula I'm presenting here on this.
80% of the balance multiplied by the interest rate divided by 2.
Okay.
Yes.
All right, so for some prepayment penalty or protection options, there's a credit for a borrower, and for other options like no PPP, there's a hit to price. Is there no brainer standard option with no hit or credit 3 years?
I'm not sure I understand the question. We have a 3-year option.
Okay. If there's a credit for borrower, so for some there's some options there's a credit for the borrower. Other times they're going to take a hit. So it seems like they're asking if 3 years is sort of the middle of the road recommendation.
Well, it all depends on this. I mean, it all depends on the scenario. It all depends what rate they want. So rates and costs. You can definitely get lender credit if you price it is such to get a lender credit, and you can do that on Quick Pricer. We can actually demonstrate one where you get credit on that, so the borrower gets towards closing costs. If you want to go back to, yeah. So what you want to do is you want to come to, let's say on the same scenario, just go down on the discount or rate, increase the rate. Let's see, now you get a lender credit of 1/4. Increase it even more, then you get more. So go down, up, it's up. And you can change that to 3-year prepay, 4-year prepay, 5-year prepay. However you think it might work for you. See, now if you increase the rate, now you get 0.5 point credit. And also one thing I think we should mention is the broker compensation. Some of you guys are approved with a lender paid comp. And let's say if your lender paid comp is, I don't know, 2%. So let's go with a LPC of 2%. Okay. See, now you're looking at 9.49, but just remember, so your 2% compensation is already built in there. And if you increase the prepay to 5-year, let's increase the prepay to 5-year. See, now your 9.49 is 9.125, and you're still getting your 2 points. And if you can sell it at that rate, or you can put some discounts on it, you can increase the discount, decrease the rate. If you want to be in the 8s, then you can definitely lower the rate, and you see that the discount point is gonna, see added discount point. So you can sell it with 7.99 with 2.125 cost to the borrower. And that would be your scenario. Again, the most important part is to make sure that the exit strategy is established and understood by the borrower. If they truly going to hold that property for a period of time, there's no reason why they shouldn't pick prepay protection to get better.
Okay. Yeah, somebody had a question about whether we do foreign national loans. I already answered that. Yes, we do. It's one of the things we excel at.
We can change that citizenship to foreign national. Well, we have to change the program to DSCR. Well, obviously we have no credit, so just to click on no FICO on the FICO score. Okay. See, now this is for a 71% LTV. This loan up to a minute. This is what's going on right now. So yes, and this is a lender paid comp, by the way, guys. So if you want to go borrower paid, then you see that the rates are significantly better. All right, see, now you're looking at 7.49 at par, charge the borrower whatever you like, 5-year prepay, foreign national, no FICO. And this is a 50% LTV, so most likely it will debt service at 50% LTV. Or if you can increase it to 75, the limit is 75, and the loan amount, it can be, you will get it at the bottom where the limit is. So you can go up to 3 million right now. All right.
Yeah, there's gonna be a second. Yeah, we've had a couple of questions about the foreign national. So if people are interested, we'll probably be doing another foreign national webinar in the future. We have done some in the past, and you can find those here on our recorded webinars. Yeah, there's one here saying yes to foreign national bars. I think we've done that one twice, so it may be in here a few times. So yeah, for those people who don't want to wait for the next webinar on foreign nationals, you can go to the Learning Center and find it there. And that's all the questions we have so far. If we have
reach out to your account executive, reach out to us.
Yep. Yeah.
We'll look at your scenarios.
When in doubt, call your AE.
Yes.
We'll go ahead and keep it open for a couple more minutes for questions. If not, I think we may be close to the end here and we can wrap up. So we'll give it another minute or so if you want to get your last minute questions in. Here's what's the minimum loan amount for foreign national? I'm going to answer that really quick.
Well, our minimum loan amounts, guys, are like 100,000. Do we make exceptions? Yes, depending on compensating factors and so on. So we leave it around 100,000 minimum.
Okay, and the max is 3 million.
Yeah. Well, depending on LTV and so on. So
yeah. And if you're an approved broker, you can check out the matrices on the rate sheets. If not, then you can reach out to an account executive and they can get you set up.
By all means, we're ready.
All right.
We're ready to answer any questions you may have. Reach out to us.
All right. I think we've answered all the questions that have come in for today. So with that, I want to thank you, Mike, for your time this afternoon, and then just remind everybody about this to give us some feedback on the survey. And that if you're interested, we'll see you next week for our special topic on working with millennial borrowers. And hope you guys have a safe and happy 4th of July until then. So have a good rest of the end of your month.
Thank you, Carl. Thank you, everybody.
Thank you,
have a
sir.
wonderful day. Bye-bye.
Bye.